Don Nelson is with us. Nelson Commercial Real Estate. By the way, now, what's this camera thing here?
Hey, we're going high tech. We're going video here. So we're going to start publishing these on our website. We've not done a good job of those, but so many people have said, geez, that's a great resource, and I missed it. And, you know, I've tried to email them a copy, and I'm low tech, and so that never works. And so I've got trained professionals to help us maximize the value of this show.
I noticed you got a Husker shirt on today.
Yeah.
They got their hands full going to Colorado tomorrow.
I'll be there.
You going to be there?
I'm going, you bet.
It's going to be interesting to see if what they did last week to that poor TCU team, or, you know, how they did that, we'll see. But,
I know.
Nebraska's got to be ready.
Well, I'll tell you, you know, I mean, I call it a moral victory after last week at Minnesota, or even though it was a loss, but loss at the last second.
They looked like they could play.
Yeah, you know, and so, you know, when you bleed Husker red, it's been a frustrating 20-something years, but, you know, we still have hope and faith. So depending on how things go tomorrow, we might not want to talk about that in the future. We'll see.
Well, we can only hope.
Yeah. Yep.
So what you talking about this morning?
Well, you know, I mean, I heard just you and Jody talking earlier, just kind of about the whole impact on our world, I guess, that interest rates are having. And, you know, it's just different out there right now. And so when things are different, you have to respond differently. And so I just kind of come up with some observations, but thought I'd have a little catchy title that just said, 2 things you must be doing right now to provide big returns in the next 18 months. So clearly today's message is for the real estate investor. Some general strategies. We're not going to get deep into the weeds in our, 8-minute segment that we have here. But, even if you're thinking about investing, don't maybe own anything yet. Even if you only own your home as your own real estate investment, some of these investment principles can be helpful to you. But like I said, the rate environment is different, so, we have to act differently. And we've done something with interest rates, we've done something interesting. We've hit a crossover point, and I don't know where that exact inflection point is. We've talked about it briefly a little bit. I don't know that people understand some of these. You get in your, terminology of your industry sometimes, but the terminology or whatever that we've crossed over into is a negative leverage standpoint. We've crossed over. We were in a positive leverage environment. So what that means is essentially in a positive leverage environment can be a little scary. You got to be, disciplined, but the more you borrow, the higher your overall rate of return on your investment. So that would, tend to put you in a situation where if things kind of turn on you, if you're highly leveraged, like things kind of are going right now, you could get yourself into some trouble. But right now, and this is, like I said, when the rates are in the 4s, you're in a positive leverage environment.
You get to the 7s, they're a little different.
7 and 8s, yeah, not so much. So now we're in a negative leverage environment, and so the more you borrow, the rates of return actually decrease. So, like I said, we're going to talk about 2 things you should be doing right now. First, let's supercharge your mortgage. So, most commercial loans are locked into interest rates for like 5-year increments. Because banks, they don't know what the future looks like. They're not going to lock you in. They don't have kind of the government involvement like you do so much in residential where, you get your 30-year loan and it's locked in and life of the loan and so forth. Not so much the way in commercial. So chances are your loan will be coming up for a rate adjustment, and some are going to be steep. One of mine jumped from 4.25% to 8.75%. That's more than doubling.
Did you have to have a drink after that?
Well, something. I did have a chat with my lender, I'll tell you that much. But
what did the lender tell you?
It's kind of read your loan agreement, the formula, the algorithm, whatever you want to call it. You signed it with a smile on your face when rates were low. All we're doing is abiding by that loan agreement that you signed up. And I'm like, okay, I want a new formula because I don't like that formula. And that's what lenders are doing. So here's this first step, and this is a significant step that you can be doing right now to supercharge your mortgage. Figure out when your date comes up, when your renewal date is going to be coming up. Talk to your banker or just anticipate on your own what your new rate is going to be. Calculate your new payment. Mine went up $900 from the, virtually doubling my interest rate on one of our properties. So calculate what your new payment will be, and here's the high profit hack. Start making that payment right now. So now you are making payments reflecting a higher interest rate, except your interest rate hasn't jumped yet. So every additional dollar you are putting in is going straight to bottom line, straight to your equity. It's increasing your return. So let's just say if your average rate increase is going to be 2.5%, and you started doing this technique with 12 months left before your rate increase, all you did is save 2.5% on a future interest rate thing.
That's money.
But here's what is magic about this. That resulted that year, that 12-month period, you got a 27% increase on your return on investment.
Nice.
That much.
What's it do to your taxes if you got a 27% return?
Nothing, because all you're doing is paying your principal down more. So, you've increased.
No consequence.
Yeah. So it's, like I said, that's just a shot of adrenaline to your mortgage, because you're going to have a significant lower principal balance than you would have if you'd kept making your regular payments if you've done it this way. So that's hack number one. Here's high profit strategy number two. And it's nothing real special, but yet at the same time, it's kind of like football. They say, football is a simple game, but that doesn't mean it's easy. And it's kind of like this. So the simple hack is right now is the time to buy if you're out looking for investment property. You've heard the strategy or phrase perhaps that you make money on the purchase. So now is the time to buy when you can. And this is the tricky part, so everyone's asking, so with all this economy and inflation and interest rate changes and all that, are prices down? Well, that's kind of a generalized question. The generalized answer is yes, because just mathematically, as your rate of money gets higher, you can buy less. So inversely, it's kind of like the stock illustration, though. If your $100 stock is now $75, have you lost money? Answer, not if you don't sell, and it's kind of the same thing. And so owners aren't really adjusting well to this lowering of prices. So it's harder to find, properties to buy, because owners are just saying, I'll just hang on to my property. 2 years ago it was worth X and today it's not. And again, directly tied to interest rates. But there are some deals out there. There are some people that need to sell right now. And if you can find a deal to buy, whether it's a 4-plex, a 120-plex, whatever. But if the numbers work today on the current rate, then, environment that we have today, and we're talking mostly things like apartments. This could be a retail strip center. It could be an office building. But it seems like the inventory that we're seeing the most of is multifamily. And so you're buying it today. There's still going to be some rate appreciation that you'll get. You'll get opportunity to raise some rents. So you buy this today. It might barely cash flow or whatever. You'll get some okay appreciations and things like that in terms of your rents and so forth. But here's the fun part. Couple 3 years from now, and this is why not everybody's doing it, because there's a little trepidation in the air still. But we think interest rate environment that we have right now isn't going to last forever. I don't think it ever comes back to the 4s. You hope it does. But let's just say if you're borrowing at 7.5% now and things come to 5.5% or something like that, you refinance 3 years down the road. Well, everything else is the same, but your cost now of borrowing is quite a bit less. So that gulf increases in terms of just your profit margin and all that. So, I think rather than listen to quotes from me, I think it's a guy named Warren Buffett. It feels a little scary out there, right now.
He did a bunch of selling, didn't he?
Well,
just what I saw recently, numbers that you and I would never dream about. but
trimmed certain portfolios by a few billion here. I have not heard
just
that.
Just a few billion.
But Warren's philosophy is simply, like I said, things are a little scary out there right now, and one of his many Warren-isms is be fearful when others are greedy, and be greedy when others are fearful. And so that's kind of the premise of what I'm saying
here.
That's
how he got where he was.
Well, yeah, right now, in other words, see which direction the salmon are swimming and go upstream instead of downstream. Everybody can swim downstream. That's the easy part. It's the guys that swim upstream.
And when to swim upstream.
Well, yeah, and there's no guarantees out there right now. So you have to trust your intuition. You have to trust your team that you're working with to say, against conventional wisdom right now. And you talk to your bankers, you know what bankers talk like? Conventionally. They give you conventional wisdom. So you're not always even going to see cooperation, from your lenders on things like this. But there's opportunity out here right now. And there's a couple of different illustrations of ways that we can look at the situation that we're in right now and say, what do we do right now other than sitting on our hands? And sometimes it's okay to sit on your hands. It's good right now to sit on your hands, but be careful. And if there is an opportunity to take your hands out from under wherever,
yes,
jump on it.
Players, are they coming from bigger markets to this market because we're more normal than they might be, East or West Coast?
The answer is yes. And it's interesting. We had it was probably 3 years ago, a group from Miami that came in and bought up a ton of apartments in our town. That stuff didn't happen, 10, 15, 20 years ago. You talk to outside capital like that, and they're like, yeah, no thanks. And it's not that they don't like our town. It's just we're not big enough. There just isn't the volume there. They don't understand, markets of our size. So it's a combination of everybody's looking everywhere, and people's lists are getting shorter, and so they start looking at smaller markets like ours. But our market isn't as small as it used to be either, so we're growing, and so for that reason too, we attract outside interest. But the main reason is what we talk about all the time, which is just it's a great place to own real estate. It's a great market to invest, and times are turbulent right now, no question. And for that reason, that even attracts more attention to Sioux Falls from an investment standpoint. Call it a flight to safety, or something like that. But the east and west coasts right now, some people are a little uncomfortable being there because, I'm on video, so I can do these hand illustrations.
Pretty good.
Talk with my hands and don't realize it even, but, the highs and lows can be far greater. We're just kind of a steady Eddie market that, certainly there's risk, but it's a lot less significant, I guess, is the best way to put it.
Nelson Commercial Real Estate, how do they find you?
Nelson Commercial Real Estate. We're on the web at ncommercial.com. Hopefully you'll start seeing these podcasts or broadcasts up on there.
Good to see you.
And you can reach me direct, 605-728-7600.